Well, hello and welcome to the Alamo Mortgage Holdings webinar. In this webinar, I'm going to talk about how you can earn a significant passive income when you purchase our high yield corporate income bonds. They are designed for dentists. They're designed for C-level executives that are a few years away from retirement, or people that are already wealthy and just want higher rates of return. So the process is quite simple. Alamo Mortgage Holdings, we are a United Kingdom company. We purchase mortgage debt in the United States, and we make a fantastic profit when we do that. And that allows us to support our bondholders with high yield corporate income bonds. So the steps are so simple. We just determine your passive income goal, whatever you've got in mind. How much passive income are you looking to achieve? We ask you what is your time frame to achieve that in, and then we can suggest an annual investment amount. You can each year purchase bonds, and we build to that passive income that you are looking for. You can email me anytime, ben.miller at alamomortgageholdings.co.uk. Very good. So very rapid, fast, lightning fast disclaimer. I'm only going to read one paragraph. The Alamo as accredited investors, you're going to be aware that all investments carry some level of risk. This investment is only available to investors who are able to assess their own appetite for risk. Please read the risk statement within the investment memorandum before investing. Fantastic. So here's how it works. We pay 8% interest. It's passive income. We secure that bond with mortgage debt. So the bonds are secured ultimately by real estate. We're purchasing mortgages in the United States at a discount. We've got a great team that has 200 years of business experience with 100 years in the mortgage industry. I'm very experienced as well. So we've got a great team. Let's look at how the program works. So let's imagine you wanted to get $5,000 monthly passive income, and you wanted to secure that long-term, maybe for yourself, maybe for your family, whatever it might be. Our product can meet that need. We are a supplement to your retirement. A lot of dentists and doctors, a lot of different professionals, they have the view that, oh, I don't need to worry about it. I'm going to sell my practice. Well, folks, there has been many a dentist that has tried to sell their practice. And even though they had an appraisal that said it was worth so much money, when they go to actually try to sell the practice to a younger dentist, sometimes it doesn't work out so well. And the nice thing about this is with our bonds, it's a supplement. So if everything works out great with your current investments and with your practice, that is fantastic. On the other hand, there's no harm in having some extra passive income. It definitely can make life better. So let's talk about why in the world would we do this? Why the United States? Why don't we just buy mortgage debt in the United Kingdom? Well, that is an excellent question. And I'm going to show you something that you may kind of be aware of, but you may not be thinking about it because the time can pass rather slowly, actually. So if we go and look at history back in 1945, towards the end of World War II, the Bretton Woods system was established. And at that time, one British pound would buy approximately $4 American. And then look here, you can see how as the decades keep passing, it went from $4 to now a pound will only buy $2.80 US. Here we see that back in 1980, a pound would only buy $2.22. And then if we went all the way down to the January 1st of 2023, a pound would only buy $1.21. So that is a massive movement in the exchange rate over time. I mean, it's really going to impact your investments. So there's a huge difference between getting 8% denominated in British pound sterling and 8% denominated in US dollars. Now, the nice thing about Alamo is if you're of the opinion that the British pound is going to increase in value, and that makes you want to put your investments in British pounds, we support that. We can sell you a bond denominated in British pounds. There's no extra charge for it. It's set up. It's quite easy to do. You just let us know. Or if you don't know which currency you want, you can split it where you do half in pounds and half in dollars. We take care of all of it for you. You don't have to do anything. And we don't make any money on the exchange rate. We're not trying to play around with charging you fees. We do it at the listed rate. So there's no profit in it. Sometimes when I talk to people, they say, that's a good idea about buying US mortgage debt because it's in dollars. I could get some dollar income. I'd be protected from the pound potentially losing more value. Yeah, that sounds good. I'll do that. And then they think, well, I'll just go do it myself. I don't need Alamo. I'll just go do it myself. Well, that's fine. You absolutely can do it yourself. But if you're going to do it yourself, you should get some education. And if you want some education, I'd recommend you train with Eddie Speed. He's really excellent in the United States. But as far as if you don't have time for that, if you're a busy professional, maybe you already have a dental practice and yeah, you know that it could work, but you really don't have time to learn about all of the technical details of what's an allonge on a mortgage note. You just don't have time for it. And you just want the passive income. You just want to enjoy your life. You can invest and purchase our bonds, our high yield bonds, and you can focus on your core business. And you'll frankly make more money than unless you're going to devote yourself full time to focusing on the mortgage investing business. So there's 6 values that drive the value of a note. The buyer. That means if you're looking at 2 different notes, how good is the buyer? Is it someone that has a government job? That's more attractive than an entrepreneur because an entrepreneur has unstable income. What about the collateral? If you have a note on a property that is for, say, $500,000 note, but the appraised value of that property is only $250,000, you would be quite foolish to pay $400,000 for that note, even though it's a discount of $100,000 from the face value. You need to know what the collateral is actually worth. You need to look at how much did the buyer put down when they purchased the property? Did they put nothing down? Did they put 10% down? Did they put 20% down? In general, more down is less risk of them walking away from the deal and you losing money. So it's better if they put more down. Of course, we take care of all of that for you at Alamo. You don't have to mess with any of that. We know how to do all of it. We help you with it. We just get you set up where you just figure out how much passive income you're looking for. We'll work with you. What about the history of the payments? How's the history of the payments? Is the debt being paid on time? What about the interest rate? Of course, it's nicer if you could buy a 10% interest rate instead of a 5% rate. What about the paperwork? Was it done professionally with a title company? These are things that you need to know. They're very important. Here's an example so you can kind of visualize how this works. Here's a real property in Texas. It's not one that's in our portfolio. I show it simply for the purpose of an example. Sales price is $120,000. Buyer put down $20,000. Mortgage debt of $100,000. At a 10% rate. The reason it's a 10% rate is the buyer could not get a loan at a bank. The bank said, oh, you're self-employed. Oh, you've got bad credit. We're not going to make you a loan. Get out of here. So at any rate, the buyer went to the seller and said, look, I can give you 20 grand. Let me make payments to you on the other 100,000. And they agreed. They settled on a 10% rate. Seller said, I'm not going to do it at a bank rate. I've got to get 10%. And that's how that would go. But after 5 years of payments, let's imagine this buyer made the payments perfectly on time. The debt is $96,574 unpaid balance. Now imagine that one day that owner of that mortgage debt wakes up and wants cash, needs cash for whatever reason. First thing he does is he calls the guy he sold the property to and says, hey, can you please refinance that? Can you go get a mortgage? And the guy that has the property that took out the loan says, no, the bank still won't give me a mortgage. I still have bad credit there and I'm still self-employed. So at any rate, that's how that works. Then the next thing that owner of that mortgage note does is he jumps on the internet and he types in sell a mortgage note for cash. And he finds a bunch of companies like Alamo Mortgage Holdings, even though there's no company like Alamo, but let's imagine there's other companies that are in the same business. And he calls them up and says, hey, can you pay me $96,574 for the note? And they said, no, we can't do that. It's done all wrong. We need a discount. And they negotiate back and forth and they agree on $83,322, which makes the yield 12%, not 10%. So on a yield like that, we actually target an even higher yield than 12%. But the point is, it's quite easy to do this with the higher rates. Now, why bonds? Sometimes people say, that's great, but I know the government's printing money. I'm not going to do that. I'm not going to invest in bonds. Well, folks, the entire history of civilization, the government has been printing money. And rather than give my opinion on why someone should have bonds in their portfolio, I'm going to talk about a Nobel Prize winning economist, and not just any Nobel Prize winning economist. I'm going to talk about the Nobel Prize winning economist that if you've got an account at Goldman Sachs, if you've got an account at Merrill Lynch, if you've got an account at all of these different big companies and brokerages, a lot of their work is actually based on a lot of the things they suggest is based on modern portfolio theory. And this was originally Harry Markowitz, who won the Nobel Prize in he won the 1990 Nobel Prize. It was a very complicated theory, lots of math, and at any rate, but when it came to his own portfolio, he didn't even use the theory that he created. He just basically would take his portfolio and he'd put half of it in stocks, half of it in bonds, and then once a year he'd adjust it. If the stocks went up in value, he'd sell stocks and buy bonds. If the stocks went down in value, he'd sell bonds and buy stocks. And that's how he avoided that. But you can't do that if you keep 100% of your money in the stock market, or you keep 100% in cryptocurrency. And don't even get me started on the cryptocurrency. I've seen a lot of investors get burned badly on that. They think they're going to get a tenfold return. They would have done much better not to lose the money gambling on the next King Shiba coin or whatever it is that they think is going to work. Why do we do Texas? Well, Texas is a state that's winning. It's easier for us to concentrate on just one state. Our team has a strong background in Texas. We have competitive advantages in Texas. We can do a better job for you as a bondholder by focusing on one state instead of just buying notes all over the United States. What are the key features? You can get your passive income goals more quickly with our program. It's very simple. We offer maximum diversification. You're not just buying one mortgage note. We charge you no fees. If I hear sometimes investors, they tell me, I've got a low fee index fund. It's so good. I've got a low fee index fund. Well, that's great that you have a low fee index fund. However, no fees to me is better than low fees. And we charge our investors no fees, zero, because we have designed our business where we are able to make a profit, and we don't have to try to hold our hand out for fees from investors. So that's a big advantage of Alamo. If you're excited by low fees, you're going to love no fees. We also can deposit to the bank account you want. We've got a great team. I'm not going to take the time to go through the entire team. You can go to our website, www.alamomortgageholdings.co.uk, and check out the team. Be happy to answer any questions, but we've got a really strong team that has a lot of experience in the mortgage business. We've got United States, part of the team's in the United States and Texas, and the other part of the team that we've got's in the United Kingdom. So we've got a strong team that's working for you. Why should you buy the notes? This is an investment that's attractive if you're looking for an above average rate of return. That's a good reason. How long term is the note? We offer 3 years, 5 years, all the way up to 50 years. Once a year we set the interest rate, but you can lock the interest rate in for as long as you like with that method. Can you put the notes in your SIP, your self-invested personal pension? I see no reason that you can't, but it's ultimately up to your SIP provider. What type of an investment? It's a corporate income bond. It's not a government bond. Is it a regulated product? No, folks, it's not a regulated product. And that's part of the reason that we can pay such high returns. We haven't gone through that additional expense of regulation. Now, if we did that, we'd have to lower the returns and pay less to our bondholders. Our bondholders understand our business, and they would rather get the higher returns than have the security of regulation. Now, that doesn't mean we won't someday do that, but right now, probably for the next year or two, we're going to remain unregulated. But at some point, we may actually go through the regulation. Who can invest? Accredited investor, sophisticated investor, institutional investor. Come one, come all to Alamo Mortgage Holdings. How's the money protected? Email me. We can set up a time. I'll go through that. ben.miller at alamomortgageholdings.co.uk. Can I invest in a company? Through a company? Yes. What about the tax? We pay all the money to you. We don't deduct anything for taxes. So it's a great situation for you. You and your tax professional can decide how much you should pay in taxes. We don't get involved with that. We just pay everything to you. What's the suggested minimum? we would suggest that you do 100,000 pounds, but if you're new and you're just getting started with us, we can work with you on an annual investment program, what's comfortable. Can you get access to the money early? No, and frankly, that's an advantage to you. I've seen so many investors that they try that day trading thing where they're going to move in and out, and they did studies where most of them just lose money. So it's better to just get a good solid rate of return in most cases. And that's one of the nice things about the way we have this structure. How do you receive the interest? We pay it to the bank account that you nominate. Well, how can I get more information? It's easy. Just email me, ben.miller@alamomortgageholdings.co.uk. I hope that helps, and I wish you good luck with your investing.